This past week, the S&P 500 pulled back to a support level we spoke about in the previous video. It reached that critical level and stayed above it. Does that mean the correction is over? In this S&P 500 analysis video, we will analyze the S&P 500 price actions, the stock market sentiment, and its internals to see what they are telling us and where the S&P 500 might be headed in the coming week. From this monthly S&P 500 chart, we see that the September close is still above the August low. It's printing a bearish engulfing candle, and it closed inside of this megaphone channel started from March of 2009. Zooming in on the S&P 500 weekly chart, the S&P 500 has been down for 4 consecutive weeks, and it is continued to be in one time framing down on a lower low. The weekly close is below the 10-week moving average, and also the 10-week moving average is starting to flatten. The range for the week is 114 points. For the week, the S&P 500 closed with a 21-point loss of 0.63%. It printed a bullish weekly hammer candle underneath the 10-week moving average. But with the one-time framing down and closing below the 10-week moving average, the trend on a weekly basis is down. Before we analyze the S&P 500 price action in more detail, let's first go take a look at the market sentiments and its internal to see what they are telling us. The VIX is showing fears have came back to the market during this week's pullback. It's been hovering at the 30 level for most of the week, and it closed the week at 26.38. The put-call ratio has also been up above the 0.75 level this week. It too is showing some fear and protection were being bought. It closed the week under the 0.75 at 0.72. Overall, the VIX and the put-call ratio are showing the market participants are starting to get a bit more fearful and a little bit more defensive. We saw some strong selling pressure from Monday and Wednesday sell-off. On Monday, the up-down volume ratio was minus 7.46, and on Wednesday, it was minus 8.07. The daily advance decline also indicated a broad-based sell-off on Monday and Wednesday. The decliner led the advancer by 2,293 and 2,459 on Monday and Wednesday, respectively. On Friday's rally, we did see the advancer led the decliner by 1,314. It would have been better if the advance outnumbered the decline by more than 1,500, but it's still a fairly broad-based rally. And for the New York Stock Exchange, new high, new low, we saw every day last week except Tuesday. There were more new lows than new highs. And on the New York Stock Exchange cumulative AD line, we saw a positive divergence from the AD line in the prior week. The market decided to resolve this positive divergence by pushing the AD line lower along with the S&P 500. So right now, the AD line is back in sync with the S&P 500. Moving on to the NASDAQ market. The NASDAQ up-down volume ratio held up much better than the NYSE. The up-down volume ratio was minus 1.5 and minus 2.78 on Monday and Wednesday, respectively. On Friday's rally, the up-down volume ratio was positive 4.56. So that's quite a turnaround. And the NASDAQ daily advance decline did not hold up as well as the up-down volume ratio. It had minus 2,175. So that means 2,175 more decliner than advancer on Monday, and 2,475 more decliner on Wednesday. So on Friday, it had 1,670 more advancer than decliner. In the NASDAQ market, the daily advance decline indicates the sell-off was broad-based as well, but the downside volume was more subdued than the NYSE. On the NASDAQ new high, new low, there were 123 more new low than new high on Thursday. The last time the NASDAQ had over 100 more new lows than new high was on April 3rd of this year. The NASDAQ cumulative AD line positive divergence from prior week was also resolved on the downside by taking the AD line to lower low. It is now back in sync with the NASDAQ 100. So from the review of the sentiment, they clearly show there were fears coming into the market last week. And the daily advanced decline also showed broad-based weakness. Now let's analyze the S&P 500 and see where it might be headed and what we could expect for the coming week. As you can see on this S&P 500 daily chart, we saw the price came down and filled this gap on Monday and dipped below it, and this gap at 3284.53. Then the following day, it came back up and filled the prior day gap. Then on Wednesday, it were unable to get back above this support term resistance, the 3318 level, and then it proceeded down toward the 3200 level, one of the critical level that we have identified as a key support level to keep an eye on. Now, the intraday on the S&P 500 on Thursday, the low was 3209.45. But during Globex, Thursday Globex trading session, the E-mini S&P 500 future dipped below the 3200 to a low of 3198 before it bounces back above this level. So you can see on Friday, it came back up and we gained the 3284.53 resistance level, where this used to be a support term resistance. So as you can see, the S&P 500 have put in a little bit more of a 10% correction. So with the intraday low on Thursday, it actually put in a 10.55% correction. So now for the coming week, here are the support level to keep an eye on. So the first and foremost is the 3200 level, then the 32.8 Fibonacci retracement, 3054, and finally the next round number near the 3000 area. Now, we're not saying that the 3000 level will be tagged next week, but that is a possibility. So we need to be aware of that potential key level to watch for potential support. Then for the resistance, the level to watch is the 3318. So we want to see would it be able to regain this 3318 resistance level. This used to be support. And if we could see the S&P 500 come back up to this level, then we want to see would it be able to get above this 3428.92, this pivot high, then the all-time high and this trend line will basically back in play if it could get above the 3428.92. So some of the price action scenario that I'll be watching on the downside is, see would it encounter resistance on a low bump against 3318 and it can't get above it, then we're essentially looking for this thing to come down to this 3200 level and maybe get a little chop, a couple back tests, and then work itself toward the next level down near the 3054 at the 38.2 Fibonacci retracement. And on the upside is if it could get above this 3318, then we'll be watching to see would it be able to get above the 3428.92. Maybe it come back and do a little bit chop before it pushes through. And once it pushes through, then we basically looking at this all-time high at 3588.11 back in play. Now let's go and take a look at the other market indexes. Let's take a look at the NASDAQ 100. The NASDAQ 100 actually held up pretty well last week, although the volatility makes it feel much worse. It did not move much lower than that 13 plus percent correction. You can see that it just kind of chopped around and dipped just slightly below the prior week low and then came back up. And the potential support remained to be this 38.2 Fibonacci retracement here, somewhere around 10,267, or this pivot low near the 10,313.94. The potential resistance will remain to be this pivot high near the 11,495.40, and then this lower channel trend line near the 12,000. And for the Dow Jones Industrial, we saw the Dow Jones Industrial broke below this support level at 27,433 and came all the way down to this gap here near the 26,525.68. It did not fill this gap, and it got a nice bounce back up and reclaimed the 26,924.78. Right now, we essentially be watching this gap, see would it be able to hold above this gap or fill this gap and get it bounce back up next week. So the 26,525.68 will be one of the potential support to keep an eye on for the coming week. And if this level does not hold, then we essentially are looking for the 38.2, somewhere around 25,000 level as the next potential support. Then on the resistance, we're basically looking at this 27,433.50 to see would it be able to get above this level and then bounces back up. And then the trend line would also be the other resistance or the other potential resistance to keep an eye on. And the Dow Jones Transportation came down to this support level and got a bounce off of it at 10,960. So next week, we keep an eye on this level as the potential support, the 10,960. If it breaks this level, then we're essentially looking for this 10,640.50, this gap fill here, as the next potential support. Then on the upside, the resistance essentially will be the all-time closing high up at the 11,623.60. The Russell 2000 broke this support level down here at the 1461.30, and it found support near the gap here at the 1432.50. And also, when it came down to this gap, essentially put in a 10.66% correction. So right now, it got back above this 1461.30. And for the coming week, we're essentially looking for this as the nearest support level to see would it be able to hold above this 1461.30. If not, then we basically are looking for this 1432.50 and see would it be coming down to fill this gap and see would it get a bounce back up. And if that doesn't happen, then we're essentially looking for the 38.2 Fibonacci retracement down here at 1360.20 as the next potential support, also in confluence with this level near the 1355.80. In summary, the S&P 500 pulled back to a critical level near 3,200 last week and held above that level. The sentiments were showing increasing fears throughout the week. The up-down volume ratio and the daily advance decline also showing strong and broad-based selling. And we are starting to see more new lows than new high, and these could be a sign of further selling ahead, or it could be the end of this correction as this week's selling has shook out a lot of the market participants and have reached a 10% correction level. With the S&P 500 rally back on Friday with a nearly 2.5% intraday swing and closed with a 1.6% gain, gaining back more than 51 points, this could be a beginning of the recovery from the recent correction. But until we see the S&P 500 start to move back above the potential resistance level of 3428.92, we should remain very selective on initiating new long position with reduced size. Do not go FOMO. If this is the end of this correction, there will be a lot more potential upside opportunity to come. So don't chase it if you miss the initial move. Be sure to click the thumbs up to help me share and promote this video on YouTube. Thank you for watching and stay safe.